Good morning, ladies and gentlemen. This is Greg Michaelowski. This is New York Morning Forex Commentary for Tuesday, May 18th, 2010 for FXStreet, brought to you by FXDD. We'll take a look at some of our key technical levels here for the start off with the euro versus US dollar. I have a daily chart here, and we can put it in a trend line here, connecting all the lows here. Actually, put a channel here connecting the tops as well. But this level at the top of the trend line currently comes in around the 44 level for the euro versus US dollar, 44.48 type level. The high that we reached here today was 44, and the market has since come off. Currently trading at 144 or 124.22. The market moved down to I think around the 124, actually around the 124 level altogether, 123.97. Looking at the hourly chart now, the key levels that we are going to be watching here today, in addition to that 48 level on the top side, that trend line resistance level, is this 124.31 level. What's the importance of that? Well, if you go back in time, you take a look at this low here, original low here. Then we use that level as resistance here, lose resistance here, use it as resistance here, resistance here. When we broke above that 31 level, we went up to that 44 level, 48 level, and could not move any higher. The market quickly came down since that time. The market has moved back up to the 34 level in recent times, but again, not able to extend to the upside. So we're kind of at a key level here for the euro versus US dollar. We got to get through that 31 level and then move on our way through the 48 level on the top side. Take a look at the 5-minute chart, and you can see how the correction to the move to the downside came right down to our trend line. That's a nice little correction there. That's helped give the bulls a little bit of more confidence to the upside, give those profit-taking buyers an opportunity to buy against this trend line, a low-risk trading opportunity. If the market had broken through that line, we also had support against the 100-bar moving average on this 5-minute chart as well. So this was a good buying level for the euro versus US dollar, especially given the the bullish sentiment here, the upward trending slope here for the day's trading. So we are in between support. We are in between resistance, and the market is going to have to either make up its mind or just trade in between those two levels. If we're able to get through this trend line, we should see for lower prices. If we're able to get through the top side, we should see higher prices in the euro versus US dollar. Targets on the top side would include this 100-hour moving average. This 100-hour moving average comes in at 124.81 level. We've been above that 100-hour moving average all the way going back here since May 10th. So a test up to that level would probably find some sellers. But with the first things first, we got to get through the 31 level, got to get through that 48 level, in which case then we'll head higher. On the downside, where do we have support? 123, in addition to that trend line, of course, the trend line off of this 5-minute chart and the 100-bar moving average at the currently at the what is it? 123.90 level. Off the hourly chart, we have this trend line down below, which comes in at 123.43. So that's well below that level. Additional support comes in at the close from Friday. The close from Friday comes in at 123.80. So 80 to 90, good support on the downside to start things off. And then we'll look from there. Let's go to the sterling versus US dollar, and this currency pair remains in a fairly narrow range. I put a line here at the 144.94 level. It corresponds with this low, and also if you move along this line, we went a little bit above it but failed. We use that level as resistance. I had a lot of little tops here on an hourly basis in the late yesterday, early Tokyo session. Had a top here earlier today after the market sold off. Again, a break to the upside failed, and over the last couple hours, we reached a high here of 144.86. But it's having some difficult times when the market approaches this 144.94 level. So we're gonna be watching that level on the top side. If we're able to break through that level, we should see further upward pressure in the sterling versus US dollar with a move toward this 145.35 level as the next level. What's the significance of that? That was a closing level on Friday's trade here. So that would be the next level on the top side. After that, we have 145.52 on the top side for the sterling versus US dollar. On the downside, off of this hourly chart, at least we have good support down at the 144.06 level that we had a low there earlier today. We had another low there on the corrective move to the downside, and since that time the market has moved higher. Let's see if there's any clues from the 5-minute chart. And what the 5-minute chart is telling us is that the market is in this non-trending period. How do we know that? Well, the 100 and 200 bar moving average here, that's the blue and the green line in the chart, are going sideways. I'm going to put that in yellow instead. It makes it a little more clearer here. The 100 and 200 bar moving average are converged, and at the same price. We just went above it, we just went below it, and now the market is moving back higher, so the bias is to the upside for this currency pair, looking for the moves through our key levels, 92, looking for moves up to 145.35. We're going to have to, we're broken through this 67 level first. That was some highs here. The next level to get through is this 92 level. If we get through the 92 level, we're up to 35, so we are trying to build build a case for higher levels in the sterling versus US dollar. On the downside, getting through this 144.10 level is paramount. You can see here we have a lot of lows in that area right there, so moving through that level is going to be important. But the first things first, we got this is our key, this is our pivot here today. That's our 200 and 100 bar moving average, currently coming in around the 144.53, 54 type area, and as long as we can stay above it, that bias remains to the upside for the sterling versus US dollar. So look for buyers against this level, especially on a correction, maybe into the low 60s, and see if this market can finally develop the upside potential that it's or the upside move that we're looking for, the momentum type move that we're looking for in this currency pair. Let's go finally to the Japanese yen. We'll take a look at that from a technical basis, because this currency pair has been really consolidating as well. I'm going to take a look at the hourly chart here. I'm going to zoom out here. You can see here first when I zoom out, the market had this very volatile action a couple weeks ago, moving sharply to the downside. Since that time, we've really been bear flagging or bull flagging it here with if I could put a trend line here across tops, and I can put a oops. Let's move that up there. I can put a parallel trend line over here as well. So it's forming. Oops. Let's move that down there. So you can see that we're in this channel here. We're looking to break through the top side of the channel at 92.89. Other clues that the market has a little bit better bias is that we're above the 100 and 200 bar moving average here, and both of them are converged. This suggests that the market is non-trending and the market is looking to trend. So first things first, we are above it. That gives it a bullish bias. The next thing we have to do is get through this top trend line, and then we should see further momentum to the upside for this currency pair. We'll see how that all pans out, but right now being above the 100 and 200 hour moving average gives us a pair of a bearish bias, and the fact that we were not able to move and sustain the move to the downside, especially after testing the 200 bar moving averages here. This last one is very weak move to the downside here. This was okay. This was very weak to the downside after testing the 100 bar moving average, and so the market is going to try to the upside, but we need the momentum, folks. We need the momentum to break through this trend line in order to get the market excited with the upside move for the dollar versus yen. This is Greg Michalowski taking a look at some of our major currency pairs on behalf of FXDD for FX Street. We'll talk to you later. Bye-bye now.